What's going on, everybody? This is Jordan with Conquer Trading and Investing, and we're taking a look here at the S&P 500. In this video, we're going to take a look at some important technical levels. We're going to look at what happened today, intraday, and we're going to look at what is going on overnight and into tomorrow. Now, let's get into it. This is going to be a shorter video than normal. I want you to pay attention. We're going to be direct and to the point. A couple of things that I want you to notice is that this has been 1, 2, 3, 4, 5, 6, up 6 days out of the last 7 days here on the S&P 500. The buying has been relentless. You could see across the markets today, China went ahead and embarked on some easing today. And you could see that we've seen risk on globally as all of a sudden, the appetite for risk is just growing and growing. We're seeing that play out here right now. Is it the time to jump in long? Oh, there's something that I wanted to bring up to you that was about Stanley Druckenmiller. Let me do that with you right now. Now, Stanley Druckenmiller is one of the greatest investors of all times. He has a track record of 30 years in a row of making over 30%. He talks about he's made a lot of mistakes. The reason I bring this up because the timing is perfect to these current market conditions. So pay attention. And then right after it, we'll look at the close today and we'll get into what took place during the day and we'll look at what's going forward. Now, he said this is a kind of funny story 15 years later. At the time, it obviously was not too funny. So he told this back in 2015 because this takes place during 2000, during the dot-com bubble. And he said in 1999, after Yahoo and America Online had already gone up 10x, he got the bright idea to short internet stocks. He thought they had gone too far, too quickly. He put $200 million in them, and by mid-March, he was down almost $600 million. 3x, right? He had got completely bleeding up, and he was down 15% on the year. Now, he had never had a down year in his life. He'd been up 30% year over year up until this point as well. He continued that track record. So the next thing that happens, he's down in Silicon Valley, and he's talking to a young kid who has Asperger's. And while talking to this kid, he was convinced that this new tech boom was taking place this time, that it was different, right? So he hired a couple of gunslingers because he only knew about IBM and Hewlett Packard, and he needed to understand all these new companies, right? So he ended up something like 35% on the year. The Nasdaq had gone up 400%. So he'll never forget it. Come January of come January of the year 2000, he jumps into Soros' office and he says that he's selling all tech stocks, selling everything. That it's crazy being at 104 times earning. It's just completely nuts. He's going to step aside and wait for the fat pitch, right? He did not go in and fire the two gunslingers. They didn't have enough money to really hurt the fund, but they started making 3% a day. 3% a day those guys were making. It was driving him crazy that their little account is up 50% on the year, while the whole Quantum Fund was just up over 7%. So what did he do? Stanley Druckenmiller FOMOs. Around March of that year, he could feel it coming. He just had to play. He couldn't help himself. And 3 times during the same week, he didn't do anything. Finally, he picks up the phone. He missed the top of the market by an hour. He bought the top of the dot-com bubble. He bought $6 billion worth of tech stocks. And in 6 weeks, he had left Soros, that him and Soros lost $3 billion on that trade. What did he learn from this? He said he didn't learn anything. He already knew that he wasn't supposed to do that. He was just being in an emotional basket case and couldn't help himself. So maybe he learned not to do it again, but he had already known that. He didn't learn anything new. Why do I bring that up? Right here, people want to FOMO. People want to FOMO. This is not the market to FOMO into. I'm telling you, it's not the market to FOMO into. Be careful out there. Let's take a look at what happened intraday. And when I say this is not a market to FOMO into, before I get into that, first I want to discuss the trade that I took out today. I took this trade live today. This is where we were when New York began. We were trading, coming down over here on the open pretty hard and fast. Some people wanted to FOMO to the downside. I just took a step back and noticed that we are currently in no man's land. Was going to wait, and I did have a plan. My plan is that if we came up and we tested this trend line over here, if we tested this trend line and we did not break right around there, 30.72, then I would be looking for a short entry. We pulled, look at the anatomy of a trade. It's a good trade. Came back into the trend line. We're then rejected by it, right? I decided what time frame I wanted to take the trade off of. I took it off the 30-minute time frame. I got short. And then over here, I had my stop loss in at 30.75. I got hit the last 10 minutes of the day, stop loss on that trade. Now, it was a really good trade because it was a good setup. Not only that, my risk reward going this trade was extraordinarily healthy. It was 1-6 going into the first area of support I was looking at, and I wasn't going to take profit there. That's where I would consider taking profit, right? Jordan, just keep buying the market. The market is just bid. Why are you trying to take pokes at the downside? No question about it. Over here, as we're in the top of this range over up here, excuse me, that's a bad line. Let me redraw that for you. As we're at the top of this range over here, the risk the risk does not warrant stepping in and buying the dips for me. There's not enough profit potential over here, right? I'm gonna wait until we pull back into a support, and that's when I'll buy the dip. But I'm not buying any intraday dips over here. Again, we're up 6 out of 7 days. The party's gonna keep going until the party doesn't going. A couple of things that I want to look at what happened. Now, the S&P, they surged, right? They surged 10 points in one tick in the closing. What does that mean? There was an imbalance of orders. There were too many buy-side orders and not enough sell-side orders. Now, this happens when there's not enough market liquidity. Is that a good sign? Do you remember the last time that happened? That was in March, right? Take a look at this. You're looking at over here, this chart. It's looking at early March spike, reflects very low early day depth, not a good end of day. So here we go back into March. This is when there was no liquidity at the end of the day. That's happening again right now. You just saw in one tick, 10 points on the S&P as there was a $3.2 billion order imbalance to the buy side. Not a very good picture. Over here, what are we looking at? We're looking at the conversation is going to be changing from liquidity, which we've been focused on, central bank expanding their balance sheets. We already looked at the fact that the S&P, that the equity markets are tracking global liquidity. They're not tracking the expansion of the balance sheet. The expansion of the balance sheet has improved liquidity conditions. But what's going to happen now as we start entering bankruptcies? What's going to happen as solvency becomes an issue? What's going to happen as the market begins to focus on earnings? The conversation is going to change. I am not joining this party. I am not FOMOing here to the upside. I'm going to keep my capital protected. I'm going to keep myself continuing to take at the right times small little pokes, looking over here as the risk warrants it. What about going into this evening now? What am I looking at, right? We're closing at the high. Again, we closed at the high. I just showed you what that looked like with that order imbalance, right? So am I looking over here overnight for a position? Look, most likely not. We do have some important numbers later this evening, some PMIs out of China. If things take a turn, if, for example, the situation inside the US escalates as it does tend to do towards the evening and the night hours, if for some reason the market really starts to sell off, the market would have to sell off. It would have to take out, at the very least, the 3,050 level, the low intraday of the New York session. At that point, depending on what's going on, yep, I might be inclined to go ahead and take a poke at it. But most likely my posture is, and every time I have the posture that I'm going to stand on the sidelines, that's normally when I wind up getting into a trade, but that's my posture. For real, I don't plan on taking a trade until tomorrow. We're going to look at this tomorrow, a half hour before the markets open together. We'll see what's going on at that point, and we'll develop a plan. Listen, the market's always going to be there. There's simply no rush. I liked my trade a lot today. Yeah, I took a 13-point loss on it. That's all right. 14-point loss. That's all right. It was there. It was there. That's the right trade to take. Again, for those who missed it, right? Started breaking down, pull back into broken support, holding as resistance as it resumes off. There was no follow through. The buyers are relentless. The buyers are relentless. This down move happened. It once I believe there was talk of the National Guard being brought into New York City. I believe that then was reconsidered. I'm not really focused in on exactly what the news crossing the wire is as much as I am what's happening on the charts. Got to take what's happening on the charts. Right now, my posture is I'm going to be on the sidelines, wait what happens overnight. However, if we take out the low and if we take it out with a little bit of authority, I might be looking to position myself in here. I'll be taking a look. I'll lead you all through it if it's at an hour where that's possible. But most likely, I'm going to be on the sidelines tomorrow. We'll take a look at this in the morning. We'll reevaluate. Thursday, we have the ECB coming up. Big deal. The dollar's been soft. It looked like it possibly could have been putting in a swing low today. That could change. That could put a little pressure here on the S&P. We'll put it all together tomorrow during the live stream. I hope to see you there. Have a great day, everyone.